Sideways trends seem to be locked in place in the grain markets. That means it's a good time to take a step back from the day-to-day price action and try to get the big picture of the markets in focus. We are going to do that today. And we'll try to figure out what the mixed messaging from the Fed means for the commodity markets.
Live from Davis's Monday via Farm Journal broadcast, this is AgriTalk. This afternoon, we chat with Bill Barauch from Blue Line Futures. Directly following the news, Todd Bubba Horwitz from BubbaTrading.com. I'm handsome newsman Davis Michelson. Now, say hello to the host of AgriTalk.
Yeah.
Huh?
Yeah, I'm
Chip Flory.
Thank you.
Huh?
Thank you. I
Yes.
think I'm more willing to live in Reality Wednesday than Davis's Monday.
You think?
Yes.
I don't know. Davis's
That's where
Monday
I'm
is
at.
pretty sweet. It's
Is it pretty
sweet.
cool?
Ho, ho, ho. Yeah. You get to answer like 10,000 emails and try to remember what you were thinking about on Thursday last week. And
Yeah.
it's a lot of fun. A lot of fun.
I'm sure it's not. I'm sure it's not. Welcome to AgriTalk. I'm Chip. That is Davis.
Hey.
Yeah, we got Davis back. We got our Davis back.
Ah.
It's good to have him here. So
Had a chance to visit the great state of Iowa over the weekend. Spent
That's
a
a
little
nice
extra
state,
time with
isn't it?
family. Yeah.
yeah.
There you go. Sparkle
Yeah.
City is as sparkly as I left her.
Oh, that's beautiful. That's good to know. Good to know. All right. We are going to have a conversation today with Bill Barauch from Blue Line Futures. And when we get Bill on here, we tend to talk macro. Stay away from the day-to-day minutia of what is making, what's got corn up 3/4 of a cent versus what's got the overall trend going sideways. We're going to spend more time on what's got the overall trend going sideways and where we might be going longer term in the conversation with Bill. And when we get him on, it's our opportunity to talk about some markets that we don't usually get an opportunity to talk about. So we're going to talk about gold today. We'll talk precious metals. Yeah, I
Now
knew
I'm
you'd
interested.
like that.
Yeah, baby.
I knew you would like that. Well, it's my gift to you.
Oh,
You know,
you're such a giver.
welcome home. Now, let's get to the news.
Well, Chip, wheat futures were slightly lower at mid-morning and extended losses into the end of the day. The lack of a threat to the U.S. winter wheat crop and the lack of price bullish headlines coming out of Russia and Ukraine is making it difficult to maintain buying in wheat futures. July soft red winter wheat futures today fell through and closed below support at 560 for the first time since March 26. Chip, today's price action opens downside risk to the March 15 low at 542 1/4. That's for your new crop SRWE futures. Today, July HRWE futures 14 cents lower, 569. July SRWE wheat down 12 1/2 to 552 1/4. July spring wheat closed at 639 1/4, down 5 3/4 on the day.
You know, the headlines that are coming to the wheat market right now, there's a lot of European-based news out there. And you know what? I don't know if any of it matters to the price of wheat in the U.S. It's just a lot of moving of bushels around in that European market that isn't it. It's representing demand that the U.S. wasn't going to get anyway.
Huh. Well, corn futures are stuck in a sideways trading range. July futures closed lower for a third consecutive session, but prices this week have stayed inside of Friday's trading range.
Yeah.
The go-nowhere trend in corn is finding resistance at the 10-day moving average. Ethanol production weekend at April 12 averaged 983,000 barrels per day, down 73,000 barrels from the previous week and 4% below the same week last year. Ethanol stocks declined 128,000 barrels, but still a weight on the market at a weighty 26.08 million barrels. The slowdown in ethanol production did nothing to support corn prices. May corn futures 3/4 1 cent lower, 430 1/4. July corn down 1 3/4 cents, 441. December corn futures closed at 464 3/4, down 2.5 today.
Yeah, watch the consumption figures on gasoline and therefore ethanol. Things seem to be slowing down. I'm not exactly sure what's going on, But if we get a slowdown at this time of the year and it's allowing us to build up stocks and to slow down production, that's not a good combination for ethanol.
Well, July soybean futures posted a low-range open and, after spiking support at 1160, posted a high-range close. July beans are trading well below the 10-day moving average, keeping speculative traders comfortably on the short side of the bean market. The lack of a threat to U.S. or South American production continues to limit buying in the bean market. Bean oil futures closed higher, but well off session highs. Lower Malaysian palm oil prices are an anchor on U.S. bean oil prices at this time. May beans 4 1/2 cents higher on the day, 11.49 July beans up 4 1/4, 11.64 1/4. November beans closed at 11.61 1/4, up 2 3/4 cents.
Yeah, just a bit of a pop in bean market today. We'll see if we can get any follow through, but it's going to be tough to make that happen.
Well, cotton futures tried to recover after yesterday's mid-range close, but the rug got pulled out from under the market again, with futures closing below yesterday's low. July cotton today 176 points lower, 81.33. Quickly on your livestock's live cattle futures, looking for direction from the cash market ahead of Friday's cattle on feed report. June fat cattle down 40 cents today, 175.32 May feeder futures 70 cents lower, 240.27 1/2. And on the snout side, June hogs a dime lower, 102.72 1/2. Chip Flory.
All right, thank you very much, Davis. Let's bring in Todd Horwitz, BubbaTrading.com. Bubba, my friend, how you doing?
What's up? It's a beautiful day in Las Vegas on the 6th hole. Just waiting for you to call me.
Yeah. Well, you're in a better spot than what a lot of us are. There's no doubt about that, because a lot of us are trying to figure out what in the heck is. Can you interpret what Jay Powell is telling us now?
He's telling you that there's no rate cuts, is what he's telling you, which is why you're seeing some pressure on the equity markets. And again, there's only two reasons now you can get a rate cut. Okay. Either they do it for political reasons, which is always possible, but we know that their mandate is jobs and price stability, okay? But it's either for political reasons that they cut, or it's because they feel we're going into a depression, okay? Because all the bankers keep talking there's going to be rate cuts. There's no rate cut. You cannot possibly cut rates with these numbers that they're reporting. So if you believe the numbers they report, there's no way that they can cut rates. It's impossible.
Yep. Oh, I'm with you, man. I'm with you.
But in the good news, the grains look like they're bottoming, so that's a good sign.
Okay. Well, what does
I don't think they're going straight. Don't get me wrong. I don't think they're going straight up tomorrow, but I think that you're seeing some decent bottoming action. And if we can hold these levels for a while, I think there's a good chance we're going higher. And I think that cattle's going 10 to 12.
Oh. You cut out on us. I want to hear what you had to say. Where'd you say on cattle?
I said cattle's going 10 to 12% lower.
Oh. All right. Now, the higher interest rates for a longer period of time. Okay, you go ahead.
You got higher interest rates.
There it is.
You got nothing to be excited about for money-wise. You're losing jobs. People are having to work 2 and 3 jobs. Eventually, you're going to stop buying beef.
Yeah. That's the big concern. There's no doubt about it. Bubba, get back to golf. So, be careful out there, okay, buddy?
Thanks, guys. Have a great day. Davis, the Handsome Newsman. Goodbye, guys.
Todd Horwitz, BubbaTrading.com. On the 6th hole, out someplace in Vegas. Bill Barauch, Blue Light Futures, up next.
If the world is your oyster, we've got pearls of wisdom on AgriTalk.
Welcome back to AgriTalk. I'm Chip. Glad that you are with us on this Wednesday afternoon. We're going to talk big picture. We're going to talk about some markets that we typically don't get an opportunity to talk about on AgriTalk, and we're going to do it with Bill Barauch from Blue Line Futures. Bill, thank you so much for making time for us today. How are you, man?
I'm great. How are you doing? Thanks for having me on.
Yeah, I'm glad you're here. Hey, did I see on social that you were road tripping back from Augusta, Georgia this week?
I was down in Augusta for the Masters this past weekend. It was one beautiful course, beautiful time. Weather was great once we got past Thursday, and a very memorable experience.
That's outstanding. That's one tournament, as I understand. I've never been to it, but as I understand, that's one tournament where where inflation just has left the concessions behind. Is that right?
Yeah, I mean, you could go in there. I mean, I think it was a couple bucks for a sandwich. Beer wasn't too expensive either. Like I said, memorable experience. I felt like I was part of the tournament. We were on the 18th tee box for the last couple of groups, and the sun was behind us. So our shadow was basically where Scotty Scheffler was teeing off the finish, and they told us we can't move. So that was pretty cool. It was a good experience.
Yeah, that is being part of it. That's being right in it right there. No doubt. Good for you. Good for you, man. That sounds like a great trip. Great trip. Okay.
Yeah.
Okay. Inflation and interest rates have been a topic of conversation for quite some time here on AgriTalk, and I was planning on ramping it up this week, and holy smokes, Jay Powell did us a favor, I guess, yesterday and made the conversation a whole lot more interesting. I'm going to start this a little bit differently than what I had planned, and that is by putting it this way. What's wrong with a period of stability in interest rates, Bill? Is there anything wrong with that?
Well, depends where they're stable from. I mean, if we're stable at 5.25%, and inflation is below 3, yes, CPI is above 3, closer to 4 in some arguments, but the Fed's preferred inflation indicator, core PCE, is annualized below 3, year over year below 3. So, I mean, I think right now, if you want to cause a recession, which some arguments, Richmond Fed President Harker yesterday was talking about maybe that they would have to almost cause a recession. He may not have said those words, but I think that's what the market interpreted him as saying in order to slow some of the spending. If you want to cause a recession, you keep interest rates at 5.25, 5.5 with inflation. Let's call it 3%. And that's why I think right now bringing interest rates down. I believe the Fed also thinks that they are restrictive at this territory. So, Powell yesterday is a bit speaking out of both sides of his mouth because of the market's reaction function. They can't let the market know their intention. Plus, they want to see more data. So I think stable interest rates, but it depends where we look to be stable from. I think they can settle in a little lower here. And that's why I think the cuts are still on the board this year.
Really? Even though he's basically out and saying it's not going to happen. See, I've been in the camp for a long time, Bill, that interest rates are going to have to stay high at least until the end of the year, and then we'll take a look at reevaluating interest rates and where they should be in 2025. I just didn't anticipate a whole lot of movement this year. If we see those interest rate cuts, isn't it giving the markets something that maybe they don't deserve? Because interest rate cuts are normally reserved for a time when the economy needs a boost, and I'm not too sure it does.
Well, I think we can all agree that there are stresses within the economy, stresses on the lower people making lower wages, stresses within the banking sector. But let's focus on the sort of haves and have-nots here. If there's a top 10% of people out there, that are very comfortable. Now you look at the top maybe 5%. I think there was a survey that if you have $10 million or more in your bank account, you're in the top 5%. And those people, I think, account for a tremendous amount of spending. But if you have $10 million or more in your bank account, and you're able to get risk-free 5%, you're making $500,000 a year risk-free. You almost really don't even have to work, and you're spending money. So I think there's pressure within the economy right now with interest rates hanging up here, where a lot of the services being driven are from the haves. And almost in some degree, bringing interest rates down would force people to spend less. I think it's a, sort of a, let's stop thinking two-dimensional and start thinking 3D and 4D, because I think that is something here. Now people could say, okay, interest rates coming down would even balloon the housing sector a bit more. Well, I think there is a lot of pent-up demand within the housing sector that may drive force if interest rates come down and may create activity and drive up prices for a shorter period of time. But I think there is a pie of demand. It's not an infinite pie. So I think once that activity takes place over a 6-month or 9-month time frame, I think then housing prices can come down. So I actually think the opposite. I think that interest rates at this level are driving the economy and actually creating a larger divergence between the haves and the have-nots here. I mean, imagine if you have more than 10 million, people who have $20 million in the bank account are making $1 million a year. Those are the people flying down to the Masters in private jets and spending all the money. So that's how you have to think about it here. And I think the Fed is thinking about it that way. And then there also is the banking stresses. The longer the shorter end rates and the inverted yield curve take place, I think you're going to start to see other skeletons pop up with the banking sector, which is also a fear, or the commercial real estate sector, which is also a fear of the Fed. So I think I'm looking from those angles and then saying, okay, well, why is Fed Chair Powell saying that we may not get interest rate cuts this year? Well, because that's the market reaction function. They can't let the market know when their intention, because the market will price it in before they're ready. I mean, if you look at it today, the CME Group Fed Watch Tool odds are still showing a 25 basis point cut in July with a 45% probability. So they're still looking at even pricing in 2 cuts this year. I think that is about right. And if the data continues to worsen or shows any worsening effect, or inflation shows this little bump up to be a blip, then we'll be quickly pricing in 3 or maybe 4 cuts again.
Okay. Oh man, interesting perspective on this, Bill. Definitely, it's let's bring it down to general average consumers out there. You know, the ones that are still a little worried about how they're going to put gas in the tank and pay for the grocery bills out there. What is this? What kind of an impact does this have on their lives? Not so much day to day, but month to month.
Well, I mean, inarguably there is real inflation that's not being measured by the Fed's or the government's tools. I mean, we all know gasoline prices over the last month have risen, but by the measurements with seasonality, in the most recent PPI numbers, the government was trying to tell us that gasoline had dropped month over month. So, I mean, I think we all know that inflation prices, whether it's what you're paying at the pump, what you're paying in the grocery store, is impacting everybody. Now, the question is, what's really driving that? And I think, there obviously is some supply disruptions that have disrupted things. There's geopolitical concerns that have disrupted things. And I think a lot of that is really working through right now. I mean, there is, I believe, an effect too from the Red Sea and the shipping impact that happened earlier this year. That could have been a more of a cause on some of the rise in inflation. But again, I think when you're seeing the services spending, which has underpinned this economy for the last year, I think a lot of that's coming from what I spoke of, the people who are the haves. And then when you look at, I'll even go one step further to say the job market is distorted for 2 more reasons. You have those people that are the haves that now can make risk-free money. Now they can explore entrepreneurship. They can look at other ways to make money rather than being in an office and working a normal job, and then which then causes those that need the job, the employers that need to fill those voids to try and attract new employees to fill these higher end jobs, which creates wage pressures. We also have immigrants coming in and flooding that is also creating more people in the job market. So on the jobless claims, and you look at the monthly payroll numbers, those are increasing surprisingly. There is more distortions out there causing this effect than I think that people want to really talk about.
Wow. Okay. Really cool. We are in the middle of a conversation with Bill Barauch from Blue Line Futures. Now, we got to break all this down and what it means for the trends in the commodity markets. And I want to spend some time by request of listeners, talking about what's happening in the precious metals. We'll do that next.
Let's go to the markets page at profarmer.com and check today's closes, where July HRW wheat futures were 14 cents lower, 5.69. July SRW wheat down 12 1/2 to 5.52 1/4. May corn futures 3/4 of 1 cent lower today, 4.30 1/4. December corn futures closed at 4.64 3/4, down 2 1/2 cents. May soybean futures were 4 1/2 cents higher at 11.49 1/2. November beans closed at 11.61 1/4, up 2 3/4 cents. July cotton today 176 points lower, 81.33. On your livestock, June fat cattle were down 40 cents to 175.32 1/2. May feeders 70 cents lower, 240.27 1/2. June lean hogs a dime lower, 102.72 1/2. Visit tryprofarmer.com for more.
Opinions expressed on AgriTalk do not necessarily reflect the views of Farm Journal Broadcasting, affiliate stations, or sponsors. We don't make the news, we render it. AgriTalk.
Welcome back to AgriTalk. We are in the middle of a conversation with Bill Barauch from Blue Line Futures. Big picture stuff is what we're getting into today. Bill, I want to jump onto this, because there are so many different spots around the world right now that are delivering headlines to the global markets. All these geopolitical hotspots out there. Are they distractions to the markets, or are they real factors?
I think there are a little bit of both. It depends, what you are looking at. I do think that let's just start with the equity markets. You look at the equity markets, and you get a move that we've had in the past year and a half, where it's arguably was a little frothy a month and a half ago, and then we get a headline activity geopolitically, or just maybe it's something that's like a war-like headline, or maybe it is barbs being thrown between U.S. and China, as we're seeing with Biden in China here today. In that case, I think there's reason for people to take a little off the table. You're just people to see a little bit of selling. So those headlines, can impact it, but it doesn't change at the end of the day what the earnings we are going to see in the coming weeks. And I think that the market is reacting a bit, maybe profit taking because of the headlines in anticipation of getting ready for earnings. Or you could take a look at a market like crude oil that is not as well supplied as it could be. And OPEC is taking production off. The U.S. has increased some production, but there could be disruptions. We have Iran in the mix. So I think there's definitely some geopolitical bidding underneath of crude oil, and then you take a look at the metals like gold, which we trade all of these at Blue Line Futures. We work with clients to trade these, and it's really easy getting set up with us, whether it's trading with us or trading. We run a commodity fund as well that people can participate in, but. I've cut my teeth trading gold since almost 20 years now, basically, and gold. It's really exciting to see the record highs this year, and I think you're seeing a combination of the geopolitical fears, the division that's taking place from a within. You look at the United States now separately. There's the BRICS, which Brazil, Russia, India, China, South Africa. The BRICS, I believe, they are buying gold. We know that China has added to their gold reserves for 17 months in a row. And I think this is, markets don't always have to react, how they should immediately, but when we look at Russia invading Ukraine, and we, there was seized assets of Russian oligarchs and things like that, some of the markets react adversely than common sense would have thought. But in the aftermath, we're still dealing with the aftermath. And the aftermath is the fact that those assets were seized. I mean, it really underpins reasoning to have gold and make gold a part of your portfolio. And I'll tell you what, with the ranges that we've seen in gold and silver, as well as copper and platinum, I mean, I think we're getting into what is a commodity super cycle, but these are great tradable ranges that people can participate in too. So I think this is the type of market I've been waiting, for 20 years. It's tremendous to see, but it doesn't end at the metals. I mean, the commodities. I do think we're at the onset here of a commodity super cycle.
Okay. All right. I was going to say, the patience is paying off in the precious metals markets right now. There's no question about that. So congratulations on that. Okay. You mentioned what Biden is saying about China today. Is it a legitimate risk or possibility, I guess, depending on your perspective here, that the Biden administration is going to triple the tariffs on Chinese, what is it? It's steel and aluminum, right?
Yeah. Well, I think we haven't. Now, we've seen barbs being traded over the past year and a half, but we have not seen him really take a strong stance on tariffs in the headlines. And now, my question is what is the intention here? As he heads into an election season, we know that former President Trump, during much of his time in office, had pushed on the tariffs with China. So maybe there's more of a political posturing here for campaign reasons. But I'll tell you what. I mean, I don't know if you've seen a chart of aluminum. We do own aluminum right now in one of the commodity funds that we run. I mean, that is a good looking chart. That thing has really run up and has started to break out. The CME group does have aluminum offering. And I think when we look at copper and aluminum, I mean, those are two markets that have just started to awaken. I mean, from the demand, they're both very undersupplied. And I think, you look back about a month ago, China shut down smelters to stop producing the refined product of copper, high grade copper, which is what we trade, because the raw product is undersupplied. So I think there's trickling, and these are impacts of inflation. Even though copper has not been, really traded high relative to history in the past year and a half. I mean, these are sort of anecdotes of why inflation could be a little more steadfast and settle in at a higher level than what we've become accustomed to over the last decade. But also as our economies evolve, you need copper and aluminum and palladium, and they're being used in data centers. For which kind of leads into the AI trade. So there's a lot intertwined here as our economies become more developed, and what commodities are going to be used in this ever evolving future of ours with AI and everything else we could imagine. But it's not, again, it doesn't just end there. I mean, look at things like coffee and cocoa recently. I mean, just now, I mean, there's news that Vietnam is rationing the water. And I mean, look at coffee in the last couple of days. That's a market we've been playing. So I mean, we missed cocoa, but I was going to. What's the next soft commodity to make the move? And I think all of these are anecdotes that lead into we are in a commodity super cycle. There is no better time to be trading commodities or investing in commodities. Even though U.S. ags have been a little bit disappointing, but
So when does this commodity cycle? When does it help the ag commodities, corn, soybeans, wheat, the basics?
Yeah. I mean, I think right now, as from a sentiment standpoint, and I would really turn to one of my team members, Oliver Slope, who always joins you. But I do think that I think we're trying to bottom out here, and I think too, if we could consolidate a bit and see some of the exhaustion from funds that are short and start short covering. Really at the end of the day, every rally starts to short cover. So we need, but what's going to start that first? Some positive fundamental news. So if we could see some positive fundamental news and anecdotes within the market, you could potentially start to see some short covering. I mean, maybe above that, the report, the end of March report, if we get above that high, that could be a line in the sand for some of the shorts, right. and we could start to see that thing begin to run a bit. Okay. All right.
Bill, as we've been talking in the second segment, I've gotten 2 texts about this. And I'm not one to talk about this very much, but they want me to ask you your thoughts on Bitcoin. Now, if you don't want to talk about it, just say so. But thoughts on Bitcoin?
Listen, I mean, I do believe that that Bitcoin can have a place in a portfolio, and we do run a wealth management office, and I manage diversified portfolios with stocks and bonds,
Yeah.
and not commodities, and with the Bitcoin ETFs, it's something that we are discussing to potentially begin adding. With a 1% or a 2% slice into portfolios and get exposure to Bitcoin. Now, I think traditionally when you see any market run up as it has, the introduction of an ETF and the ability to now expose the broader audience to Bitcoin through an ETF has definitely been the catalyst this year for the price being driven, touching above 70,000 in that record high. We're now settling in, and it's not surprising to see the market settle in. Heck, we could really settle in as low as maybe 40,000 or so. It's some of the retracements technically, but I do think that we haven't seen the end of this rise in Bitcoin, and it's something that again we are addressing, that it may serve as a purpose in our portfolios. Right now, we do have slices to gold and silver in our investment portfolios, not the commodity portfolios, but in our investment portfolios as well. So we're more focused on that. But it is nice to have an alternative. Now the question here about Bitcoin is it trades more like a risk asset than it does a hedge to risk aversion.
Yeah. Well, I'm just going to say this: congratulations, Bill. You just had the first conversation about Bitcoin on AgriTalk, and I didn't choke and puke. So I I think I'm going to say that I survived it.
There you go. Hopefully we'll have many more to come. And we'll talk about gold and stocks and Bitcoin, all kind of make it all together. So we're not just throwing Bitcoin at you too much.
Yeah, well, thanks. I'll have to take it in small bite-sized pieces, because right now it just feels like all it is numbers. I don't understand the value. I don't understand the change in value from day to day. I don't know what drives it, and it just is. It's an enigma to me, and I need to. I've been trying to understand it since it first showed up, and I still don't think I do. So we'll have to continue the conversation. Man, thank you for making time for us, Bill. Appreciate you.
Appreciate you. Thank you for having me on.
You bet. All right, that is Bill Barauch, Blue Line Futures. Like Bill said, every Thursday on the PM hour of AgriTalk, we've got Oliver Slope on here giving us his thoughts on what's going on in the grain markets, the livestock markets, and occasionally what's happening in the world of sports. All right, Davis and I will be right back to wrap up today's AgriTalk in a moment.
The best talkers in ag, including you. Join the conversation on AgriTalk. Call us at 855-4TALK-AG.
Welcome back to AgriTalk, everybody. Glad you're here with us today. I'm your pal, Davis Michelson. I got Chip Flory right here, too, just hanging out.
I'm
How's
here.
it going,
I'm here.
buddy? Yeah?
Good.
You good?
Yeah, I'm trying to let all of that kind of soak in a little bit so that so that I don't lose track of it.
That was an awful lot. Good stuff from Bill Barauch. We're going with the ch on the end. I went with the K in the intro, and I realized my mistake. Barauch from Blue Line Futures. Dude's got his handle on all this stuff. Just sneaking back to Bitcoin just really quick.
Yeah.
Because you said something about it, I don't even know how long ago. Time ago.
Yeah.
Trying to get your head around it.
Yeah.
What's Bitcoin worth? Bitcoin's worth what somebody's willing to pay for it. How do we get to price movements from one day to the next from that? Well, now that's above my pay grade. But it is, it's interesting that they're talking about bringing it in like maybe 1% of your portfolio type of a thing, just to have it in there. And then with these ETFs too, that's interesting as well. I don't know if we're ever really going to figure it out, buddy. I really don't.
Well, it seems to me that Bitcoin is a series of numbers that has a value that is arbitrarily assigned to it. It does not have value because there are, and I get that it is in limited supply. It needs to be quote unquote mined.
Mined. That's right.
Right. So there is a limited supply of Bitcoin available to the market. But you know what? I'm gonna make 6 units of chip coin available to the market too.
Okay.
What's it worth?
$1 a piece. I'm in.
Send me a damn check.
$1 a piece.
Okay. So now how do I make them worth $1.01?
Right. That's the question.
Or
I can say,
do they become worth 99 cents?
Right. I can say my dog is worth $500. If I can find a second bidder to give me $525, now we got a market.
Yeah.
But just because I say, doesn't make it so.
See, and with Bitcoin, there's an auction feel to it as well. I get this. I understand this because, when we get Machine Repeat on Monday mornings, or you are talking about a land auction that took someplace,
Mm-hmm.
that all of a sudden we've got a $30,000 an acre piece of ground in northwest Iowa. How did that happen? Well, it didn't happen because one person thought it was worth that. 2 people had to think it.
At least. Yep.
Right. And it doesn't get there by itself. And so I understand that to get the momentum going to the upside in Bitcoin, you've got to have that buyer's momentum in the market. When you get the sell-off, if the buyers step out of the market and there's nobody left to buy it and all there is profit taking, you can pull the rug out from underneath that Bitcoin market faster than you can pull it out from underneath hogs, faster than you can pull it out from underneath cotton. The reason that I can say that with conviction is because we've seen it happen.
Yes.
Okay? So those are the few things that I feel like I understand about Bitcoin. And you know what? Maybe that's all there is to understand.
It could be.
If that's the case, then I'm not convinced that it's something that I want to spend spend an effort to invest even 1% of a portfolio in.
Yes, and that's where I wanted us to get here with just this, and we'll move on. There's lots of other things to talk about. But since listeners sent questions in about this,
right?
And let's not give investment advice here. Let's be very careful. But generally, shouldn't one understand the basic functionality, the fundamentals of a particular market before they invest? I mean, isn't that what they always say? Invest in something that you understand, something you know, maybe a product you use, invest in that company. Do we need to stay out of this until we figure it out, or maybe a little get our feet wet? I don't know. Well, I don't know how to,
there was a time in my life where I had grown frustrated with trying to educate on how options work. It got to the point that finally I was telling a few people, just try it. Get an account.
Get in there.
Get in there and just try it. Do it. Just stay small. Just use one option. But do it so that you understand exactly how it works as time goes on. That's just a poor way of me not being able to that's just me not being able to explain how an option works at that time. I think I can do it now. Okay? I can do a much better job of it. I don't think you get into something just to learn how it works.
That's dangerous and expensive.
Well, it certainly can be, yes. I think if you are going to invest in something, you should have an understanding of the basic workings of that market. At least understand what makes it go up or down day to day.
Right. Which I feel like we're learning about Bitcoin, but I also don't feel like
if all it is investor attitude that makes Bitcoin go up or down every day, which maybe that's all it is. I've learned long ago and very clearly that trying to predict exactly what the herd mentality is going to be in the investment community is going to be that day. That's like next
It's a fool's
impossible.
errand. Yeah.
It's really
Well
tough.
said.
National Weather Service 6-10-day outlook, April 23rd through the 27th. Let's call it above normal temperatures across the Corn Belt, Illinois to points west. Near normal temperatures, Indiana and Ohio. Above normal precipitation expected from central Indiana, points west of that. Wow. What a conversation we've had on all of AgriTalk today. Thank you so much for being part of it. Come back tomorrow morning. Tom Bias, Carbon Alliance, is going to be with us. Tomorrow afternoon, we're talking proteins with Don Close from Terrain Ag.